Hello again, traders. Jason here with the Swing Trading Authority. Wanted to welcome you all back to another update here on what's going on in the currency markets and the futures markets. We're going to be taking a look at some of the stuff that we've got going on the charts here and run you through some of the different setups that we've got happening, as well as some of the completions we've got, some of the winners and losers for the day. So as you can see here, we got the Japanese yen spot market up here again on the currency crosses, and we just had a nice winner. As you guys know today, or maybe you haven't heard, depending on how busy you are and what your lifestyle is. We had some numbers come out. The government was talking to us today, and the dollar rallied. And as we can see here, we came down, broke structure here at roughly 8 o'clock this morning. We entered the market on a sell, and then to about noon, right after 1300, right after the news came out, we saw the market tank, come down, hit right at our targets, and we scooped up about 100 and, well, let me see here, roughly 110 pips there. So, you know, nice winner, not bad for a day's work. Take a look at this here on the daily chart. All right, we've got no setups happening in the daily. Down to a 60-minute chart or 1 hour chart. Again, on the 1 hour chart, when we run, like for example, here's a 60-minute, a 1 hour chart. Here's a 2 hour. Here's a 4 hour. As we run through all of these, you know, we're all going to have the consolidation, because those time frames are so close together, are going to be, you know, relatively the same. You know, the same setups are going to be happening in there. And you know, people ask me, well, you know, what time should I trade? You know, which one should I use? Should I use a 4 hour chart or a 2 hour chart or a 1 hour chart? And guys, it doesn't matter. What's your lifestyle? Do you want to be sitting in front of the computer all the time? Well, trade it on a 15-minute. You know, trade it on a 30-minute, whatever. I don't like to be at my, you know, I don't like to be focused on the markets that much, as far as being in the trades all that much. I like to be able to set my stops and entries, set my target points, and then go back to doing what makes life fun. And so for me, I set it up here on this 120-minute chart, or this 2 hour chart, and that means the only thing I've got to do is check the chart every couple of hours, and I'm usually sitting here around the house. I like to be close to my computer when the markets are happening, because you know, in case we get something like the news event that happened today. Had we gone the other direction, well, I want to make sure I'm on top of that, so that you know, I make sure that all my positions got closed and everything's fine with that. But you know, just to reiterate to you guys, you know, this is about you and improving your trading, so that ultimately you can live the type of life that you want to live. And if that doesn't include sitting in front of a computer 8 or 10 hours a day, then don't do it. You know, let's develop a strategy and some rules and a formula that's going to help you, you know, achieve your goals monetarily, while at the same time not sacrificing your lifestyle. But enough of that. Let's go ahead and move on. Let's see. Let's move over to Canada. Here we are, Canada USD. Again, the spot market. We had a break below again on the news. We are just short of our target here, and we're going to find out whether or not we actually hit that, or we start to see a little retracement. If we do, then what we're going to look for, if I can pull over my little Fibonacci retracement tool, is we're going to look for roughly a 382 retracement, which would be right in here. You know, for a potential, those of you who buy the 382 retracements, or in this case would sell a 382 retracement, that's what you're going to be looking for. You know, rally and then a rebound to the 382. All right, but I mean, we are just short of that target, and we'll see what happens here over the midnight hours here. I'm in Kansas City, guys, so I trade off of Central Time. All the times I give you are Central Time. If you guys are on the East Coast, you know, add an hour. West Coast, subtract 2 hours, and if you're overseas, oh man, it's 9 p.m. here, and it looks like it is about 2 o'clock in the morning in London. So you know. Good luck. Maybe you guys are getting a few winks. Let's swing on over. Well, here, let's just have a look at the daily. Take a look at what's going on. Daily, we had a buy signal. No follow through though. Looks like would have been taken out on stops. Let's see. Let's go with a 240. 240-minute chart again. Once again, 240, 120, 60-minute charts. Here's a 60. 60 came down and it has achieved targets, and now we're seeing a little bit of a pullback here. So just once again, guys, this is natural when we have that kind of movement, that we're going to see some we're going to see a little bit of a pullback. So back to our 120-minute chart, 120-minute chart, 2-hour chart here, just shy of our target. Switching over to the pound yen. All right, traders, taking a look at the pound yen here. This is a frustrating part about anything that happens in the marketplace. Is we got some news about what's going to happen with the dollar and the amount of liquidity that's about to be pumped in. And when I say liquidity, input whatever words you want to say there, stimulus, inflationary, whatever it is that you want to put in there. But basically what we've got here is we got a little bit of reaction out of the pound yen when that news came out at approximately 1300, and we had a spike down, an entry signal. The market immediately pulled right back again, and we were actually stopped out on this trade. So for those of you who sell after a close below the entry line, then you guys are going to still be neutral at this point, waiting to see if we come down in again. For those of us like us here at the Swing Trading Authority, we take our trades as we touch the entry line. So we were short and we were stopped out. And guys, that just happens. That's part of trading. You don't win every one. What you have to do is again, we protect ourselves with good money management, with good stops that are put in place in the market to prevent us from catastrophe, and we live to fight another day. We didn't take a big hit on that, and our other wins here for the week will probably compensate for it. So anyway, just remember that as you're trading, one trade is one trade. You don't make millions off of you don't get rich off one trade. You get rich off doing the right things over and over and over again and being consistent about it. So tomorrow, if I can bring over my little calendar here, we'll scroll down here to tomorrow is the 19th. And let's see, coming down here, 6 a.m., Canada has core CPI. Again, these are Central Time, U.S. Central Time numbers here. Has core CPI out. Those of you who trade Canada crosses, that's going to be important. CBI industrial trend orders in the pound. The CBI stands for Confederation of British Industries. Basically what they're doing is they're putting out domestic in industrial production orders, and good numbers, positive numbers, basically mean that they're starting to actually produce again. As you can see, we've had some negative numbers here, which indicates that the economy is slowing or shrinking. They've got a backlog of items that they're waiting to ship out so that they can start producing more. And as this number improves, it's going to show stability and basically an upturn in the British market. I don't think anybody plans to see anything resembling a positive number here. Mainly what they're looking for is how bad is it. And then as we come down here, unemployment claims will be out for the U.S. tomorrow as well at 7:30.